Dive first into the Bitcoin price chart. You guys can see M2 global liquidity here in yellow, and then the price chart right here, along with the 50 moving average and the 200 moving average. So on the weekly chart for Bitcoin, the price did rebound on the 10th of March off of the 50 moving average. And so during a bull run, we want to see the price stay above the 50, and we want to see the 50 in blue stay above the 200. Where it gets troublesome is on the weekly chart when we start to see the price break below the 50 and then come back up to test it as resistance. So currently right now, we're still in a good position. However, this could get troublesome if we see the price come down below the 50 on the weekly chart. Now, there are some other things that we need to look at as well too, stacked with global liquidity, because as you guys can see last bull run, when global liquidity started to break out after March of 2020 and the price went through that V-shaped recovery, we didn't pass below the 50 moving average until the 3rd of January. Sure, there were periods, where we wicked below it right here, but once we dropped below it right here, the bull market was completely over. So just based on that alone, the bull market is still intact. There's also some other things that I'm looking at to signal that this is just a massive bull trap to liquidate a lot of traders before sending the markets higher. We can see that there's an offset from global liquidity in yellow to the actual price action on the chart, because you guys can see right here from the 17th of June until the 30th of September at the top of the screen, global liquidity broke out to the upside, whereas the price chart for Bitcoin was still consolidating below, $68,000 to $50,000. And then it wasn't really until the 7th of October of 2024 until, the 16th of December and then the peak right here on the 20th of January, like 105 days later, that the markets broke out while global liquidity on the top of the screen was actually pulling back. So this is what I mean by an offset. And so if we were to just measure from the peak of global liquidity on the 30th of September to the peak of the crypto market, that's roughly 112 days. And so as you guys can see, just recently, global liquidity broke out from the 6th of January until the 10th of March. And so if we were to just measure how long that breakout lasted, we're currently pulling back in global liquidity, but it's been about 63 days. So if we just take from the recent corrective low and just measure about, 63 days, that takes us to the 12th of May. So in my opinion, what I think is going to happen for the crypto market, and I'll explain my logic in more detail, is I think the markets are just going to range right above the 50 moving average until we break out higher. Because if we look at the stochastic RSI, we can see that the K line is 11, the D line is at 7. Now, if we just zoom in here and remove global liquidity and also these moving averages so it's easier to see, this bull run thus far, there's been a few points where the K line, the D line have dropped this low, below 20. Anytime that we are below 20 on the stochastic RSI on the weekly chart, it means we're in oversold conditions. And the further that we drop closer to 0, the more oversold that we get. So you can see just recently we experienced a bullish cross all the way down here on the 3rd of March, where the K line in blue crossed back above the D line in orange, all the way at like 0.13. This bull run thus far, that is actually the lowest point on the stochastic RSI that we've experienced a bullish cross. The only other time was during the bear market in May of 2022. So if you didn't watch my video yesterday, I talked about these bullish crosses below 20, and I also marked on the chart for confluence to see what this looks like when we experience a bullish cross. So for example, for this bull run thus far since November of 2022, I'll just mark every single point that we experienced a bullish cross below 20. Some of them are higher than others. For example, this one right here happened at like 17. This bullish cross right here on the 19th of June happened at roughly the same point, whereas this bullish cross on September 11th happened at like 3.76. So we'll just mark each one that happened below 20. So the most recent bullish cross is obviously the one that just happened right here on the 3rd of March when the price crashed down to $80,000, and we're just holding above 80 right now. But there were 4 back here from the 9th of September all the way till May of 2024. And it was a lot of indecision between the bulls and the bears right here, where we experienced a bullish cross right here on the 13th of May when the price was at $60,000. Bitcoin bounced to 71 and then got rejected from the previous high, sold off for a lower low. Then we experienced another bullish cross. The price rebounded back up to that high of about $70,000, got rejected again, and came back down for a lower low. And this was the lowest low of that consolidation period of like $49,000. Then the price just ranged and we formed higher lows and a few fake outs right here on the stochastic RSI in the price chart. For example, this bullish cross was a fake out on the 19th of August when the price bounced from $57,000 upwards of 64 and then crashed really quick back down to $52,000 for a higher low. Then we experienced the final bullish cross on the 9th of September right here, and the stochastic RSI shot all the way above 80 while the price just put in higher lows and inevitably broke the resistance of, $71,000 for Bitcoin to breach to a new all-time high. And then sure enough, we experienced a bearish cross above 80. And now Bitcoin's price has just been consolidating, forming lower highs and lower lows. So the warning that I have for you guys is just because we've experienced a bullish cross on the 3rd of March, and now the K line is above the D line, this is not confirmed until it passes above 20 for both the K line and the D line, because this could be a fake out and the price could continue to the downside where the K line rolls back around and passes below the D line. We could see something like this. It's very well possible. So this is why it's smart to never have invested more than you can afford to lose and more than you're willing to hold long term, because what I'm going to share with you is a long-term strategy. Because in the short term, we would look at like the hourly chart or the daily chart. Right now, we're looking at the weekly time frame right here. So if we go back right here until the 11th of September, we saw a decisive bullish cross right here, a confirmation by the 2nd of October with both the K line and the D line passing above 20. And sure enough, the price went from $25,000, a great entry point for Bitcoin, all the way upwards of $48,000 before the next major correction around the ETF manipulation news from the SEC. The time before then, there was a bullish cross right here on the 19th of June, and Bitcoin's price went from like $25,000 upwards of $32,000. So when you spot these crosses right here, on average, it's actually great short-term trades as well too. For example, another bullish cross happened here on the 28th of November, and the price went from 16,000, consolidated sideways for a little bit, then broke out to 25, then inevitably 31. That would have been a great trade. So just based on this alone, what I feel is going to happen next for the market is we're just going to range for a little bit between $76,000 and $89,000, doing something similar to what we saw happen back here between the 4th of September until the next breakout. The main thing that needs to happen is we need to hold above $76,000. If we break below $76,000, then we would need to completely reevaluate this, and this would most likely be a fake out on the stochastic RSI for a bearish cross below 20. Kind of similar to what we saw happen right here from the 13th of May until the 10th of June right here. You saw a bullish cross, and then the stochastic RSI, K line, the D line crossed above 20, confirmed it, and then instantly a fake out bearish cross right here, and the price gets rejected from $71,000 to come down for a lower low. So we see bullish cross, bearish cross, flash crash. And so what we've seen recently is we've seen a bullish cross. If it's a fake out and there's a bearish cross and we see another flash crash, well, because we consolidated from the 11th of March until the 4th of November through this range right here, anything would be on the table within this range. But I just don't think that's going to happen because of what I'm going to share with you in this video. Because if we look at total 2, the crypto total market cap excluding Bitcoin, and also bring up the stochastic RSI on the weekly, the K line's at 4, the D line is at 3. We're drastically oversold compared to where we've been in the past, this bull run thus far. And we've already experienced a 42% pullback. So for people to be selling this deep into a pullback, in my opinion, doesn't make much sense to be selling right now, because if you look from the 11th of March until the 5th of August, we pulled back 42%. And then what we did, we just simply ranged and we put in higher lows ever since the 5th of August until we inevitably broke out upwards of $1.6 trillion. So I personally think the low is in on the 10th of March. Now, it doesn't mean we can't have a double bottom, but I would expect there to be a higher low and for us to just range below the 50 moving average for a period of time, putting in higher lows until we see the M2 global liquidity offset catch up to the crypto market for a rebound recovery. Because right now, with the K line and the D line this low in oversold conditions, in terms of a macro long-term strategy, it is absolutely foolish, in my opinion, to be selling at these levels, because I don't sell bullish crosses when we're in oversold conditions. What I would be selling is bearish crosses above 80 all the way up here when we're at like $1.5 trillion. That, in my opinion, is a smarter point to sell than right now. So while people are saying it's a good time to get out of the markets right now, that's completely contradictory from what the macro indicators are showing. And that's just a fact based on the charts. You can do this for yourself. Go type in total 2, click on the weekly chart, and take a vertical line right here and put it up. At each point, there's been a bearish cross above 80 on the weekly stochastic RSI. So far this bull run, there's been 1, 2, 3, 4, 5 bearish crosses above 80, and then this one was still during the bear market, so we're not going to count the 15th of August. But you can see at each point during these bearish crosses, the most recent one was obviously a good point to take some profits right up here. The last one was on the 11th of March at the exact high before we went through that consolidation period from the 11th of March until the 4th of November. The time before then was a little early on the 4th of December, but still not a terrible point, because if you bought down here, at 500 billion, you would have been selling at 700 billion in profit. You don't lose when you sell in profit. The time before then was on the 10th of April at the exact peak before the consolidation. The time before then on the 30th of January, a little bit early. But if you bought the low, even if you're selling early, you're not losing anything. Whereas right now, the K line's at 4, the D line's at 3, then let's take a vertical line and let's mark up on the chart each time we were this low. So right here during this previous consolidation phase, you guys can see 1, 2, 3 while we were still in a downtrend. But case in point is each of these bullish crosses below 20 experienced a recovery, even in the short term. So right here from the 6th of May, yes, we did continue lower, but in the short term, we saw a bounce in the market. Right here, from the 1st of July, we saw a bounce in the market before continuing lower. Even right here on the 2nd of September, we saw a bounce in the market and then ranging sideways and then a reversal. So what I think is coming next for the altcoin market, even if we trend a little bit lower in the short term and range, I think there's going to be a bounce. Now, the real question is whether it's going to be a bounce and then a continuation to the downside like this. We will see, but nonetheless, because we are so low on the weekly stochastic RSI, in my opinion, this would be great for a short-term trade. Now, not financial advice. I'm not going to tell you to buy or sell anything. I'm just going to present you guys with the data and the facts are showing this.